Well, we promised you that we will be touching base with Cosmo Films today because we've seen the packaging business and all of that being such a buzzer in trade. So we thought let's reach out to the top management. Here's the group CFO, Pankaj Poddar, now joining in. What we've also seen from the company is an expansion of its production line. Is it on track? And with inflation up, what's going to be the impact on the company's bottom line margins and expansion plans? Mr. Poddar, thanks so much for joining us live today on the market. Whichever way you look at it, there is inflation now, and higher prices is very much the norm. Whether it's transitory or structural, I guess only time is going to tell us. Have you been able to pass on the higher costs? Is there a lag? What is it that shareholders and analyst community can expect when it comes to your margins?
Yeah, so good morning, viewers. Until now, we have been able to pass on the increases, whether it's freight cost, raw material increases. Most of our contracts are linked to raw material pricing, and therefore we have been able to pass it on. However, what we definitely see a challenge in the coming quarters is that the South Asia index has gone up exponentially versus Southeast Asia. And we do see, earlier this gap was $40, $50, and it has now gone up to $250. It has been impacted by two reasons. One is the higher freight cost, which is impacting everybody in the world. And to some extent, we also feel that it is also to do with demand and supply of polymers in the country. India definitely needs more polymer production in the years to come. And it is also artificially induced. And I do feel that the index companies will take a note of it and correct them. That is the only thing that we see could be a bit of concern. Having said that, our customers are very fair. It's MOU linked contracts, and we have been able to pass on the increases to them.
Okay, now there are, of course, some very ambitious milestones that you've spoken about in the past when it comes to growth timelines. As the economy comes back from all of the lockdowns, things are opening up. What is business on ground looking like? We'll first begin with that, and then we'll talk to you about your expansion plans.
So demand in general is quite robust, not just in India, but across the globe. Having said that, there could be impacts in Europe because of the war situation out there. China to somewhat is impacted. However, what is protecting Cosmo Films, and we continue to grow very robustly, is that we are spread over 5 different product verticals: synthetic paper, packaging films, lamination films, label films, and industrial films. So what we have been able to see in all these 8 quarters is that even if 1 or 2 segments are impacted, we are able to catch up in other segments and make sure that we are fully utilized. And we see the same trend. As of now, the demand is quite robust, specifically in India. However, inflation is showing some concerns because we do see FMCG companies talking about that they are not seeing as much volume growth in the past. However, we have been able to replace it with labels and synthetic paper. So some of our specialty segments are growing very well. And this year we have been able to grow our specialty films by 20+%.
So when will the entire raw material pressure start hitting back demand? Because there would be a point at which the customer would say, look, it makes little business sense for me to give you a price hike. I can empathize with you, I can sympathize with you, but it's not affordable. Are you reaching that point with your customers?
See, normally what we have seen is packaging comprises a very small percentage of the budget of household individuals or the families. And therefore, till now, we have not seen. There is obviously a pressure back from the customers from time to time. We have also been doing a lot of cost reductions internally. Last year, we have done a cost reduction of 40+ crores. And even for the next year, we have a pretty sizable target of 40 crore again, reduction in the cost term. So we have been discussing with the customers in terms of what are the cost reductions possible and what we can pass to them. So it's an ongoing exercise that we have been doing along with our customers to see how we can rationalize the cost. But some of the things are not in our control, and therefore we have to go back to the customers and pass it on. And as I said earlier, that we see an impact in one segment and we are able to increase our supplies in some other segment, and therefore to that extent we are reasonably protected as of now.
Walk us through where the Chinese import and what is the status on that. our very basic understanding of Chinese import has been that they've been dumping a lot of so-called packaging material over the years, and post-COVID that has stopped completely, and that has changed the fortunes of, let's say, the entire packaging industry. Is that true?
See, in our segment, China was never a major exporter. They were only exporting tape films where Cosmo presence is close to negligible. And therefore, we were never impacted either positively or negatively because of the Chinese influence. Having said that, what we are seeing is that in packaging, China continues to grow, and therefore they are not exporting as much of their films. And Chinese quality is far inferior to Indian quality, and they are not present in specialty, which is what Cosmo is all about. And therefore, we have never seen China impacting us in India or any other part of the world.
Just to wrap it up in terms of the understanding of inventory loss versus inventory gain, uh, when will you be forced to buy material at higher prices? I'm asking this question to every company now because some companies have raw material which are there for another till March end. Some companies have raw material which are there till April end. The adjustment is going to be very sharp.
See, actually speaking, we do not carry that long an inventory. Normally, the formula that we follow is for domestic items, try and keep inventory not exceeding 7 days. And for imports, 30 days, and put together our raw material inventory normally stays in the range of, say, 20, 22 days. So, for us, that is never a major impact. Having said that, as I said earlier, that the South Asian index is much higher than what it used to be earlier, and therefore there can be some impact for that in the quarters to come. However, what we see is that the Chinese market will see a decline in the polymer prices, and therefore Indian polymer prices have to come down. It's a matter of high time. Till March, we have been able to, as I said earlier, we have been able to pass it on. April onwards, we have to see, but I do see that the polymer prices will come down from here. They cannot continuously go up.
Okay, Pankaj, great to have you on the show. Thanks as always for taking the time out and joining in. In fact,